This video is how to trade crypto on Bitget. I'm going to show you trading in the spot market and in the futures market, what the differences are here, how to go ahead and enter trades, buy and sell crypto, and how to use this entire trading system. Timestamps for everything down in the description. If you are a new user to Bitget, I'll leave a beginner's guide for the platform down below, which shows you how to get set up with an account and how to get fiat currency in and out of the platform. So go and watch that video if you need it. Also, if you are new, the link below down in the description, you can click that and sign up for an account. When you make a deposit, you can get a deposit bonus. You can see the tiered rewards right here. So if you are a new user, check out that link. It's not available for everyone, so you can click that link and see if it's available for you and the details in your region. The first and what I would consider the best strategy for investing in crypto, and I'm just going to focus on Bitcoin here to make it easy, is what's known as a dollar cost average strategy. That is simply where you buy, for example, Bitcoin at regular intervals throughout the year. So you put an amount in each week or each month, it'll be up to you, and you just dollar cost average over time. So the price that you get for your Bitcoin or other crypto is essentially what the market is paying, right? Because we've all seen Bitcoin is very volatile, right? So it goes up high and then it goes down low in bear markets. Well, you can essentially average out that volatility by simply buying once a week or once a month. Now, this is one of the best strategies. You can see right now, and I'll leave all of these links below to all of the resources that I talk about. Bitcoin is annualizing. It has a CAGR, compound annual growth rate right now of around 50%, right? So if you just bought once a week, right, all of the highs up here, right, when we were all-time highs, all of the bear market lows, everything in between. Just by once a week for the last 4 years, you've made 50% each and every year on your investment. So that is one of the best performing assets in the world. If we look at all of the other asset classes here, Bitcoin outperforms everything. So it's the best performing asset, and the way that you actually get that performance is by being in long term and averaging your price over time. So that is a great way, very stress-free way of investing. And what you do is you just go ahead and put some fiat currency on, and we buy at regular intervals no matter what the price, and we just wait. That is one of the best strategies. I employ it, and I implore you to employ it as well. Now I'll show you Bitget's trading screen, what everything means here, and how to lay it out in the exact way that you want. So in the top right-hand corner, you can see the settings bar here. You can choose the layout that you want. I look at this one on the right-hand side mostly. You can change this around to anything that you want. You can put dark mode on right here in the top right-hand corner as well. So choose the layout that you want. Now, on the left-hand side, this is the crypto that we're trading. So just like anything else, if you buy something, you have to exchange that for something else, right? So in currency land, if you're buying dollars and selling euros, that's two currencies together that are exchanging. It's the same in crypto. So you have the crypto that you want to buy or sell, and then you have the other half of the pair, which is the asset that you're trading with it. And so for most of the time, people will trade against US dollar stablecoins like USDT and USDC. These are one for one with the dollar. So if you're holding USDT, that's essentially like holding dollars, right? It's crypto dollars in your Bitget account. Now, Bitget do offer some fiat currency pairs as well. This is going to change depending on your region. You can see a lot of euro pairs here. So if you are actually depositing euro into the platform, then you can just trade the crypto directly against euro. I would recommend that if you do have a fiat currency that's supported, because otherwise what you're doing is, transferring the fiat currency in, swapping the fiat currency for US dollar stablecoin, and then swapping the stablecoin for a crypto. Just cut out the extra trade here and just trade straight from fiat if you have it. So you can come straight into cryptocurrency via selling euros into the crypto. So that's what you can do. I'm going to show you just trading with USDT here. So I'll click on USDT. These are the USDT pairs, and you can see them all here. You can also search, right? So if I just search BTC, and I go to all, you can see all of the pairs. We can also see that we can actually trade two cryptos together. So you don't always have to trade against a fiat currency or a fiat currency stablecoin. So for example, ETH BTC right here. What this means is that we're trading ETH and BTC. So if you have some ETH, you can sell that and actually buy BTC. Or the other way around, if you have BTC and want to trade it directly into ETH, you can just trade this pair, so you don't have to go through the stablecoin first. So you can search anything that you want. And for me, I'll be trading Bitcoin against US dollar Tether. You can see the price of the currency pair right here, which is trading. So what this means is essentially for one Bitcoin, I have to spend $67,272. Although of course we can trade any fraction of a Bitcoin, so we can buy $10 worth, whatever. So we can do that. So the layout right here, we have the charts, which I'll get onto in a little bit. We have the order book here, and this is exactly what it says on the tin. It's a book of orders. And of course, we have buyers and sellers showing all of their trades. So we have this price in the middle. This is known as the mid price. This is the price that buyers and sellers are actually coming together and trading at. And you can see it changes over time. With each and every trade, it will obviously be a different price where a buyer and a seller meet together and they make that trade. And you can see that flashing here. Now, when it flashes green, what that means is a buyer has come in and essentially bought this price. And when it flashes red, that means a seller has come in and sold to this price. So down here in green, these are buyers, known as bidders. And so they show their orders onto the order book and say, hey, look, I'm willing to buy Bitcoin per unit at this price. And this is on the right-hand side, the amount of volume cumulatively that all of these traders are putting on the book, right? So there may be one trader here, there may be 100 traders here, all at this specific price, and they're willing to go and buy Bitcoin at this price. This is the cumulative volume that you can do at that price. Now up here, these are sellers. And again, it's exactly the same. So these are all the prices that the sellers want to trade at. This is the cumulative volume that you can see on the right-hand side, the amount of Bitcoin that is wanting to trade at that price. This changes all the time, but when a buyer and seller meet, they meet at this price and it obviously flashes. Now the best bid is up here and the best offer or the best ask is up here. You can see they are different, right? Because of course they can't be in the middle the whole time. They have to be essentially, very, very small apart from each other. But essentially, we can actually trade in two different ways. So the first one is we join all of these bidders if we want to buy down at this price and say, hey, look, I want to trade at 67,000, and you can join the bidders and put your order on the book here. If you're a seller, you can join the sellers up here and say, I want to sell at 68,000, 67,000, and you can put your offer up here and ask up here. We can do that via the trading screen on the right-hand side. So this is where we actually input our orders. This is where we tell the system exactly how we want to trade and the price we want to trade at and how much we want to trade. The quickest way to go ahead and trade is using a market order. This is where you choose the amount that you trade and then you go ahead and take the best price at the current time of the amount that you want to trade. This is like going into the airport and saying, I've got some dollars, I want some euros. How many euros can I get for these dollars? So you don't choose the exchange rate that you're trading at, but you do choose the amount of your currency that you're selling. You say, oh no, I want to buy, $100 worth of euros. What's the price? It's exactly the same here. So if you go to the buy and then market, you can see that we cannot choose the price that we trade at. This is a market order. So what we can choose is how much we're spending. So I've got some USDT in my account. You can choose between Bitcoin or USDT, how much you want to buy. It doesn't matter. You're just going to put USDT in here. So let's say I want to buy, $50 of Bitcoin. I cannot choose the price because I'm using a market order. What the system's going to do is going to go over to the order book and it's going to take the best trade it can for us at the time. Now, what's the best trade at the current time? It's this one right here. It's the cheapest ask or the cheapest offer, right? So these guys are saying, I want to sell my Bitcoin at like 67,284. These guys are saying, I'm willing to sell at 67,279. It's cheaper. So we're going to press buy and it's going to immediately trade this best price for us. It's going to take that seller is going to sell us and we're going to buy $50. So that's fine. That's the cheapest offer at the current time and we can go ahead and trade that. That's a market order. Just press buy and it's going to immediately trade for you. A slightly more professional way to do things is to input a limit order into Bitget. A limit order is where you choose the amount that you trade and the price that you trade at. So we're going to press limit order here and you can see that now I can choose the price. So what we can do is go ahead and choose the amount that we want to trade and also the bid that we put in. We're buying here, so I'll show you this. So what I'm going to do is I'm going to go down to total and I'm going to press $50. So I'm buying the same amount, but now I can choose the price. And the quantity that I'm trading can now be worked out by the system because it knows that if I spend $50 and I pay this price per 1 unit of BTC, I can buy this fraction of BTC. It can work it out, right? 'Cause price and size. So what we can do is enter any price here and we're putting a limit to the system. So the limit order part is that we're saying we're happy to buy Bitcoin in this case because we're buying right on the buy side. We're happy to buy and the maximum limit price that I want to trade at is this right here. So let's put this in at 67,000, right? And it's going to work out you can buy this fraction of Bitcoin and we'll put in $50 here like this. Okay, so what's going to happen? We're going to put the instruction into the system that we are happy to buy $50 of Bitcoin at 67,000 per unit. Now the current price is 67,241. So the current price that traders are trading at is above our limit price. So what's going to happen? Well, the order will go into the system and it will be on this order book with these other buyers. But we're going to be a long way down, right? Because we're too cheap for the current traders. There are many traders who are willing to pay more than us. So we can't trade right now, but we have a limit order in the system that will wait and be there waiting to trade if the price falls and there's a seller that wants to meet our price. So what I'm going to do now is I'm going to press buy. So 67,000 is my bid, $50 worth, or this amount of BTC, press buy, and that limit order has gone in. You can see open orders and down here. Now, I haven't traded anything because my price is too cheap, but my order and my instruction is onto the system. So I'm going to buy BTC USDT. This is my buy order. You can see the price and quantity here, everything else. So that's going to remain in the system until this price matches me, and then I can trade. So I've not traded anything, but it is an instruction to the system. Now, if I want to change this around or edit it, I can do. So on the right-hand corner, I can press edit, and it says, do you want to edit the price? So let's put this up to 67,150. So we're going to put it up a little bit, and we're going to press confirm, and that will change the order. Now, I'm still too cheap, so I still can't trade, but it's there and it's waiting. I can cancel this order out if I want, so I can press cancel, and then the order is now not there. So even if the price comes down to my price, it's not going to trade because my order isn't in the system anymore. Now I'll go ahead with the live trade on the system so you can see exactly what that looks like. So this is the price that's currently trading. I'm going to be buying. I'll use a market order just so I can get the order done straight away. I'll buy $50 worth in USDT. I'm going to press buy. The system will check that I'm happy with this order. I'm going to press confirm, and you can see that trades immediately because it's just going to trade the best price in the market at the current time. So now above my head, you should be able to see that the Bitcoin on my account now is $50 worth, and the USDT has been taken out to buy that BTC. If you want to sell your crypto either back into a stable coin or back into a fiat currency to then actually remove it from the platform back into your bank account, then all you have to do is choose the currency pair that you want to trade with. So if I want to sell Bitcoin, I can just press sell. What am I selling it into? I'm selling it into the other currency in the pair, which on this occasion is USDT. So I'd sell that Bitcoin back into USDT. If you want one of the supported fiat currencies, go over to the currency pair that you want to trade. So if I go to fiat, I can choose Bitcoin Euro. And you can see the price does change a little bit here. So what we're trading now is Bitcoin against Euro. So if I'm selling Bitcoin now, and let's say I've got $50 worth or 48 euros worth, what I can do now is sell Bitcoin and sell that for euros. I then have the euros in the account, and you can send the fiat currency back out into your bank account. I'll show you exactly how to do that then. So I'm actually going to trade the USDT pair, Bitcoin USDT, sell, and it's exactly the same. We can put a market order in and sell the total amount of Bitcoin that we have. That goes back into BTC. Now we can also use a limit order to sell. So if you press limit order here, we can now choose the exact amount that we're trading. So let's say I want to sell at 68,000. Again, you can sell any amount, but we're going to sell the total amount of Bitcoin that we have on the platform, sell at 69,000, miles away from the current price, so it won't get done. But if I press sell BTC, confirm the order, it's down here again. Again, I can cancel this out. And if I want to trade immediately, I can just press market order, the amount that I want to sell. All right, press sell BTC. It's going to confirm the order, confirms, and then it sells it at whatever price. So now you've actually traded that Bitcoin back into either a stable coin or a fiat currency or anything else. A quick tip here is that market orders are very convenient, but it is better to use limit orders because you can see the price of the asset does jump around and change a lot. And so for most of the time, if you put a limit order in just a little bit away from the price, so for example, if the price is 67,150, I may put a limit order in at 65,148. And I think that the price will jump around within 5 or 10 minutes and probably I'll get my order done and I've paid a little bit less for my Bitcoin. Or if you're using a limit order and you're selling, put your limit order a little bit up away from the price, you might get slightly more. Now this is, basically irrelevant because of the amount of difference, but hey, try and trade away from the price. You'll probably get a better price for your trade on most occasions. The other thing that's important is the fees that you pay. You can see here that maker-taker fees are 0.08%. What is maker-taker? Well, if you use a market order, what you are doing is you are taking other people's liquidity off the book because they have shown their order on the book and you are taking it out because you're trading with them. You are taking liquidity away from the book, and so you pay taker fees. Now you can see right now, taker fees are 0.08, the same as maker fees, so it actually doesn't matter. But on occasion, they may be slightly more expensive. Again, it's a tiny difference, it's not gonna make much difference. But if you're using market orders, you take liquidity and you may pay higher fees over time if the fees are different. They're not on Bitget, so you don't have too much to worry about. Maker fees are when you use limit orders. Put your limit order away from the price. If you're a buyer, it's below. If you're a seller, it's above. And you're a maker of liquidity because you're showing your order and you're waiting for someone else to take it from you. Again, the fees are exactly the same. Now, if you use a limit order, so for example, if I'm a buyer and I put a limit order in and my limit price is 70,000, I'm actually not using a limit order here. What I'm saying is buy immediately as long as the price is below 70,000 and it is. So I'm going to trade immediately, which means I'm actually trading a market order at this point because my limit price is above the current price and I'm going to trade straight away. So you're a maker of liquidity or you're a taker of liquidity at that point, trading a market order essentially, right? So just be careful of exactly what your price is. Make sure you're not kind of fat fingering anything with a crazy price. It does warn you as well if you put a crazy price in that you're trading way away from the price. So just make sure that your order details are, correct before you actually press any buttons. You can check it after. When you buy BTC, it's going to check anyway. Now I want to give you some extra resources and info on just trying to read crypto cycles a little bit easier and be, way more on top of what the markets are doing rather than reacting to them. Because reacting to them is not the best thing, right? You want to be ahead of the market and have your strategy over the long term. So like I said, dollar cost averaging, right now Bitcoin moves up 50% a year. It's a great strategy. Don't have to worry about anything if you're confident that Bitcoin and other crypto prices are over time going to move up, right? So let's look at some other resources. The first resource, do have a crypto trading course. It's a complete investors course. There's 300 videos here on everything to do with crypto and getting yourself set up. Trading platforms, much more in-depth charting, technical analysis, etc. You can see all of the videos here. I update it for free for existing users as well. And you can see there's much more professional type strategies, etc. So if you're interested in that, you can check the link below. I will link it for you. I also update the course for free. You can see with my own updates on how the markets are moving, how I'm trading, etc. You can see in my portfolio. So if you want to get into that, check the link below. There's also Discord groups with thousands of people in there, talking about this all day long. Now, the other resource here, and a great resource, is TradingView. TradingView is completely free, so go and download it if you haven't got it already. You can just log on, you just need an email address, and it's gonna give you this free charting software. You can get it on your phone as well, literally for free. It's absolutely amazing, so definitely use it. I highly recommend it. I use it all the time. I do have the pro version, but you don't need it if you're just starting out for sure. So what I'm going to do is analyze the longer term Bitcoin chart. Now, if you're trading crypto, if you're buying and selling crypto, right, and you want to take some profits or you want to buy in, what is the best time? So we're going to analyze the long-term chart. Then we can do that. Then we can move over to medium term and short term for every strategy. If you want to dollar cost average, if you want to take advantage when prices are low and you want to take advantage by selling when prices are a bit higher, etc., we have to do this analysis. So what I do is go over to TradingView. I get the Bitcoin chart here. This works for all the other charts as well. So whatever crypto that you want to trade, I'll just show you with BTC. What I'm going to do is go down to the bottom right, click these settings here, go to logarithmic. This crushes the price scale as it gets higher. This is what we look at when we're looking at a very long-term trend in the price of something. If you look at the regular price chart, you can see it's pretty crazy, right? And it looks like we're in this crazy bubble or something like that, and really volatile price moves, right? But if we just go to the logarithmic chart, it makes the network adoption, the adoption of the price, much easier to spot. And actually what it's doing, the volatility is actually decreasing over time. It can be very, very volatile, but we're getting this curve around as the asset matures and the price gets less volatile. It has higher highs and higher lows over time. So what we're going to do here is use a couple of indicators. So press indicators and then type in moving average. And moving average simple is fine. I'm going to click this twice to get 2 on here. Okay, so now we have 2. On the left-hand side, I'm going to change the settings. I'm going to go to length, 200. And then down here on time frame, we're on the chart time frame right now. We're on the weekly chart. You can see this W here. That means each of these candlesticks is 1 week. Now, if you don't know about candlestick charts or anything like that, that's in the crypto course. Right, it goes through everything in minute detail. I have lots of free videos as well on YouTube, which I'll link below. But we're on the week chart here. I'm going to change this. Actually, I'm going to keep it on the week, right? So 1 week is fine for me. So I'm going to press OK. That is giving me a 200-week moving average of the price of Bitcoin. Now we're going to go to the other one And we're going to put a 50 period moving average on here. And we're going to do week as well. So I'll just leave it on chart. Just change the style here to something else. Okay, so we're going to press OK. So what can we see here? So what we can see is that we have the price of Bitcoin, the candlesticks here. Very, very volatile, bull markets, bear markets, moving up and down. But if you're a long-term investor, like I said, dollar cost averaging, this blue line is actually the price of Bitcoin for you. Because what's happening is your portfolio is buying over time and you're getting a moving average of the price. Your cost basis is this moving average. So your moving average, right? If I actually take the chart off here, just go to hide, the moving average in blue, that is what Bitcoin would be for you. Essentially, the price going up over time, your cost basis is rising as the asset is getting more expensive, but that's your price over time. So that's not volatile, is it? That is a moving average, right? A smoothed out moving average of the price if you buy once a week or once a month. That's what you get. Now we can also see here that the white line, the moving average, is a 50 period moving average, meaning we're looking at 50 weeks. And so that moving average will track the price a little bit more closely. All right, so it's not as smoothed out. And what you can see is that we have bull markets and bear markets. See when this price is moving down, that's obviously a bear market where short term the price is going down a lot. You can see another bear market here, another bear market here, right? But you can also see these big bull markets, right? Where not only the price of Bitcoin, but the moving average is moving up, right? So you can see that there are, without a doubt, these areas where you have bull markets and bear markets. If you think that the price is moving up over time, long term, which the blue line is telling us that it is, you can use the price of Bitcoin or the shorter period moving average, lower time frame moving averages. You can see that when we have bear markets, these are areas where you have to buy Bitcoin. And that's not easy because during a bear market, everything's going to pot, everyone's scared, the price is going down, but that is where the returns are made. An asset that is going up in price longer term, using these areas, right? These are all opportunities to go ahead and buy. That's where the majority of profits are made, right? Short term, right? So if you're looking to trade, going a little bit shorter time frame, you're looking at these areas are the best areas to trade. As you go from kind of a bear market into a recovery, into a bull market, right? That kind of move where the moving average is starting to move up again, that's showing we're going into a bull market. That's very, very good to trade shorter term. Now, you can use both of these strategies, right? The longer term strategy, the blue line, just moving up. You can also use the volatility of Bitcoin to your advantage and make sure that you are buying when prices are relatively low in relation to the trend. What we can also see is that when the price moves into this trend line, it's typically the end of a bear market and we start to move higher again. 1, 2, 3, 4 occasions where they were great buying opportunities. So use charts to your advantage, use the long-term trends to your advantage as well. When prices get detached from this trend, that's trading opportunities, right? And the trend is very, very high right here. The price is very, very high, right? Typically way higher than the trend. Maybe that's the top of a bull market as well. So you can use that to time shorter time frame trades, or use this to actually take profits when you've been buying right here. But you have to spend some time in the market to make these returns. Now we'll go over to the futures market and I'll show you how to trade in here. Very different than spot. So spot trading, this is where you buy and hold the assets. You have them, you own them, they're your property. If you buy Bitcoin, it's yours. You can take it out of the platform, withdraw it to a wallet or anything else. That's spot trading. Futures trading is much more for short-term trading, speculation. You can use it to hedge some of your positions as well. If you're a little bit more advanced, I've got some videos on that. I can't go through that in this video, but some other strategies you can use in the futures markets as well. Futures trading is a derivatives market, meaning that we are not buying and selling crypto here. We are just taking positions on the price. What you do is you take some USDT, put it in your account, and that is your collateral to pay for any losses that you may have in your trades. If you win, you open the position, close the position, make a profit, that profit comes to you. If you open and close the position and make a loss, you pay for the loss. That's it. So when you open and close the position, it's done. There's no assets trading hands here. It's just the price and we're trading the price. That's why it says open long and open short. We're not buying and selling. What we're doing when we're opening a long is we're buying the price. Someone else is selling that price. So we've got a long position. We benefit when the price goes up. We sell higher and we book the profit. With a short, what we're doing is selling this price. Someone else is buying that price from us. We sell the price. We want the price to fall so that we can buy back lower and book our profit. In this one, if the price goes up, we win. In this one, if the price goes down, we win. So you can take positions on the price going up or down. We're not trading crypto, we're just taking positions on the price. When trading futures, all we have to do is put some collateral on the system to open trades, and that is usually USDT. So if you go to futures trading here, USDT margin futures, we're putting USDT on there to margin our positions to pay for any losses. Some people also use coin margin. That's when you put a crypto asset on as collateral. So for example, Bitcoin. That's more risky because your collateral changes in value and you have positions based on that as well. So that increases the volatility of what you're trading. So it's definitely more volatile. For example, if you went long Bitcoin with Bitcoin as collateral and then the price fell, not only is your position losing, but your collateral is losing value as well, which isn't great. And remember, we need value there to pay for any potential losses. If the loss gets too big and you start to not have enough collateral to actually pay for the position and the loss, then the system will sell your assets to pay for the position and cancel out the position. That's known as being liquidated. When the platform says, look, you don't have enough collateral, you either post more, put more in the account, or just let the position get liquidated. So most people will use USDT margin futures. So go down to transfer, you can put the USDT in from the spot account into your margin account, and there you go. Now, this is only for short-term trading, and we now can choose to either go long, betting the price going up, or go short, thinking the price is going to go down. We can trade with an amount of leverage if we want. So up here it says isolated. You can choose between isolated and cross. This is how is your margin used? How is the collateral that you've put on being used? Isolated, each individual trade that you have has margin and collateral there that is isolated in that position. If that position blows up, it blows up, but the other positions that you have their own margin and they're fine. Cross margin is when you use your margin, your collateral, across all trades. So if one trade really goes south, it could knock out all of your other profitable trades as well. So most people use isolated, so we'll press that. We can see long and short leverage here. You can click this to change, so you can see the leverage that you use. I'll explain exactly how this works. So leverage is simply the value of the trade that you have in the market versus how much money you are putting down into that trade to pay for any potential losses. So let's say I'm going to choose USDT and I'm going to go to nominal value USDT. I'm going to press confirm. Now we can see if we go and put an amount in. So let's say I want to trade $100 nominal. You can see the cost to me should be less than that because I'm using leverage. I'm using 2x leverage. 2x leverage perfectly would be $50, but according to this, I only have to put $33 down. Right? So the leverage is the actual amount of money that you're putting into the position to pay for a loss, the cost, and then the leverage on top of that, that's the size of the order that you've traded in the market. So this nominal value, I'm trading $100 in the market. My cost should be around 25 bucks. I'm going to change this leverage now, and I'm going to change it to more leverage. Right? So let's do 5x leverage, press confirm. We can now go over. You can see that my nominal value is the same, but my cost is way lower. So that's leverage on top of the cost and what I'm putting down. So if you're thinking like, how much should I trade? Go to nominal value, and that's your trade size in the market that you're trading. Leverage is just how much money that you put down to pay for losses. This is incredibly important because it tells us what price it can get to as we're getting liquidated. So what we're saying here is we've only got $13 worth of assets to pay for a loss, right? On a $100 trade. So this thing goes down 13% and we get liquidated. If we use less leverage, right? So let's go to 2x here, press confirm. What we now know is that this thing can fall, essentially 33% because we're putting $33 into the trade. This can fall 33% against us and we're fine. We're not going to get liquidated. That's important to know because as we enter a position, we know our entry, we know our stop loss, and then we can work out how much leverage we can take. I'll show you an example of how this would work by going into a position with a potential stop loss and then working out how much leverage we can take and how much we want to risk of our portfolio. So like I said, maybe 10% of your actual portfolio you put up at risk if you want to trade short term, but you really don't have to if you want to just invest in the asset, right, going up at a decent rate each year. So what we want to do is we're going to go long here at this price, 66,934. So I'm going to trade a market order and we're going to get in here. Now, what is the typical loss that I can make here that would be moving against me. So what I can do is actually go back into my higher time frame charts and figure out, are we in a bull market or a bear market? This is my longer term chart. I share this with course members as well all the time. I think we're in a bull market as of making this video. Why? The 50 period moving average is moving up and it has crossed the 200 week moving average. That's bullish for me. The price is definitely moving up with higher highs and higher lows. So we're in an uptrend. The price is not towards the top of its range, which is actually somewhere where you wouldn't want to take long trades, right? Because the price usually rejects from here. That's usually the top of a bull market where you get another bear market. Not a good time to go long. So we're in a bull market. The price is moving up, but it's still within the bull market and there's still time to trade long. Now what I can do is go over to something like Glassnode. Again, I'll link all this below. This tells me typically in bull markets, Bitcoin tends to draw down in bull markets 30%. Very typical bull market drawdown. It will have that many times. So there are opportunities to trade. Drawdown in a bull market means the price is low, may reflect back up to the upside. Around 30% or so. 20 to 30%, I can get in a position. And it could also draw down maybe 50%. And that's something that I have to be aware of. So let's go back into the chart and use this data. So what I can do is find a time when the price draws down around 20% and try to enter trades. So this price here, any of these, right? Any of these you can actually work, but we'll do it with this one. The price got up to this level and then drew down around 20 to 33% right here, right? So that would be somewhere where I would trade because it's a 20+% drawdown in a bull market. So I buy those drawdowns and I make sure that I give myself room to the downside to trade, that if it does move a bit lower, I'm fine and I'm not going to get liquidated, use too much leverage, etc. So let's go ahead and do that. I would go to buy at this price. So let's say 56,000. Let's put limit order in, right? 56,000 and the nominal value, whatever you want, right? Now, what I have to make sure of is the price could draw down 50%. Right, that's kind of within the bounds of possibility as well. A 50% drawdown from that price would be 36,000. So we're going to go over and make sure that the leverage that we're using isn't too much and it's going to liquidate us if the price moves in this range. Well, what we can see is we should be able to see the liquidation price to the downside. You can see that right here. So I'm using 2x leverage, $100 trade. It's going to cost me $28. That's fine. I've got $100 in the account, 28,000. That's fine for me because my stop loss would be 36,000. So that's well away from my price. I'm not using too much leverage and I can go ahead and trade. If I press this leverage button now and I move it up, right? So like 10x leverage, press confirm. What you should see now is that the liquidation price is much higher. Now my liquidation price to the long side is 50K. This is too much leverage because my trade will get wiped out if we hit 50K. And I'm saying from my research that the price could come down to 36K with a big drawdown. I'm going to get liquidated. My trade's going to come out with normal volatility. So all I'm doing is looking at how volatile is Bitcoin? What does it usually move? And I just want to place trades around that, playing the odds of the volatility and the drawdowns in bull markets. It's as simple as that. You can enter a trade here, give the trade some room and get out at this price and make sure we're not going to get liquidated. So let's move our leverage down, right, to something more appropriate, right, something like this, 2x leverage, press confirm. We're not going to get liquidated. We're miles away. We're all good, right? So what we can do is enter here and then have our stop loss here. We're going to have a stop loss. So we're going to press TPSL like this. What does this mean? Take profit, stop loss. These are extra orders that you put in as essentially sell orders. If we're going long, then a stop loss, let's say it was 36,000, right? This tells the system, I'm going to enter long at this price with an amount, and I want to actually take a loss if the price comes down to this level. Because if it's dropping more than 50%, like what's wrong, right? That's outside the normal volatility band. And so you can take a stop loss here. I would always recommend a stop loss when taking leverage, otherwise things get out of hand. Unless you're using an amount that you're trading with that you actually don't mind, right? It's like it's either in or it's out and that's it, right? That's my 10% speculative money this year. and I'm making 5 or 6 trades with it, and each of those can get liquidated. Maybe 2 of them do, maybe 3 of them don't, and so on, right? Again, just playing the odds. But a stop loss is recommended. So that's my stop loss at 36. I know exactly what my entry is, and my stop loss, I know how much money is at risk. The take profit, you don't need, you can put that in if you want. Again, that's a sell order if you're going long. So you can put the take profit at, let's say we go back into the higher time frame charts, and I think that the bull market can get up to 100K, right? So you can put something like that in, or whatever you want, and you can put those in with the order. So they cancel out the order once it's in. You don't have to use them. You can if you want. You can leave them blank as well. Now I'll show you a live order in the futures market as well. So what I'm going to do here is press market. I'm going to open a long trade, and we're going to put an amount down. We're going to open long, confirm the order, right? And then you can see those details down here. So you can see everything right now. So the position size, the unrealized P&L. This is the P&L that is in the position, because you can actually get out of the position over time. Let's say you get in with $1,000 worth. You can actually close half of the position out. So you close it, maybe you take some profits. They're what's known as realized P&L, because you've taken those out of the order, but you still have an unrealized P&L, which is what's running. Again, that could be a profit or a loss. And you can see all of the details here, right? So the entry price and everything like this. So what we can do is go and close the order. So if you press close, you can see that would close the order out. So press close here. Do you want to confirm that? What you're doing is essentially going short, because I've gone long here. So I'm going to close the order out to 0. So if you're long $1,000, you need to close the order out, and that would have no position, right? So you can go ahead and do that. Flash close means essentially market order flash close the position. So it's all out. And TPSL, you can now add these in, right? So full position TPSL. So I'm going to press this and okay. You can put this in here. What this means is, you can actually add these in. So if you didn't put a stop loss order in when you open the position, you can now put that in, do the whole position, confirm, and that is an order in that would be a stop loss down here at some point. I don't have that in at the moment. You can do it for take profit as well, so you can add it in after. You can also see full or partial. So again, if you want to close some of the order, so if you want to take a profit at 80,000 and then finish out the order at 100 or whatever, you can do that. You can edit everything here. So it just shows you everything. So what I'm going to do is flash close this position, and it's going to basically take everything out, press confirm. And so I've got no position here, right? So you can see those on here. I entered and closed the position. There is much more to trading and investing. I'll leave some free videos below. The Crypto Investor course has 300 videos, and you can ask me questions in the groups as well. And Bitget deposit bonus if you are new, linked down in the description. I'm James, it's Money's EG. Cheers for watching, and I'll see you in the next one.